Welcome back. You're watching Market Fatafat on ET Now. Nifty as of now down 200 points. 24,805 is what the Nifty is holding at. But there are a lot of stocks moving in trade on the back of news flows and technicals. And now on the technical front, we do have Arpit Beriwal joining in with us this afternoon. Arpit, very good afternoon. And, let's start with your first stock for today. You've picked out TVS Motors. What is it that you're looking and watching out for in terms of the target over here? And are we expecting an upside here?
Very good afternoon, everyone. So, if you talk about over the market setup, we have seen a negative opening on the initial tick. However, if you talk about auto space as a whole, so auto index has been quite strong uptrend from past almost 1.5-2 years, and within that, auto pack TVS Motor are top pick. So, if you talk about technically the structure, it is in strong uptrend. On weekly scale, after a huge consolidation of last almost 6 to 7 weeks, it has given a range breakout above 2500 levels. On daily scale, it has retested the previous breakout zone and moving higher. So all in all, looking from a fresh perspective, the base of the stock is shift higher from 2300 to 2450, and now slowly, gradually, you can expect another up move of 8 to 10% rally towards 2750, 2800 levels. So within auto pack, TVS Motor is quite strong, trading a lifetime high, and we can see a good uptick of 7 to 8% from current levels. So one can go long at current levels or minor dip in between 2550, 2560, with keeping stop loss of 2480 for an upside move towards 2700 plus zones.
Alright, Janai, coming to you then, an earnings candidate, all cargo terminals is what you've picked out for us. Tell us what is the report card looking like for this one?
Well, yes, so pretty in-line numbers with expectations. If you look at the revenue, it grew about 5%, coming in at 190 crores this time versus 181 crores on year-on-year basis. Net profit saw a jump of about 6%, coming in at 9.5 crores versus 9 crores year-on-year basis. If you look at operating performance, then EBITDA was muted around 3.5%, remained at 30 crores versus 29 crores, and EBITDA margins also remained subdued, coming in at 15.8% versus 16%. Now, earlier the management was at ET Now, where they spoke, where they told that the growth has been largely led by imports. Also, they are expecting volumes to remain stronger in coming quarters.
Okay, but on that note, let's listen into what the management themselves had to say as well. More on that, listen in.
We expect this momentum to continue. We also would like to see exports starting to play a larger role, given the thrust around manufacturing. That will add on to the volumes. So we remain optimistic that these volume numbers will continue in this trend. And we are largely optimistic on the future for a multiple set of reasons. One, the continued thrust, even in the latest budget, on the manufacturing sector. The enabling government policies around logistics, starting with the PM Gati Shakti policy, the national logistics policies, all of them set the overall macro picture very right for logistics and supply chain organizations like us to kind of contribute strongly to the economy.
Okay, let's move on to the next stock that we'll talk about. And, actually, let me highlight the numbers of CAMs that have come in. We are seeing a revenue of 27% growth for CAMs that we're seeing coming in. Profits of the company, that's what we're watching out for as well. Profits of the company have seen a growth of almost 41% on a year-on-year basis. Let's pull up the charts of CAMs if possible, because we want to see where they're moving, right? Numbers don't seem to be bad on the first look at least, and that is why if today's chart we'll pick up for CAMs, let me look at what that share price is doing. Recovered from the day's lowest point again, so a bit of a fall. We'll keep an eye out on that. Today the market is a bit subdued, but CAMs surely is a one to watch out for. We've seen an increase in terms of the EBITDA margin, also basis point, 300 basis point expansion in terms of EBITDA margin. So all in all, decent numbers, at least on the first look at what seems like for CAMs. We'll keep an eye out on that. Moving on to the next stock that we'll highlight today is Ixigo. Now that stock is buzzing in trade. It's a recently listed company, and when you're looking at it in terms of the numbers of the company, what a sharp improvement in terms of the profits of the company, right? Just look at it. Almost, I beg your pardon, almost doubling in terms of the profits of the company, 78% uptick in terms of the profits. Revenue of the company also seeing a very strong growth coming in there. All in all, a very good set of numbers. The demand trends for overall, the travel side has always been improving. So margins also have seen an improvement, 11.2% versus 8.7%, 250 basis point expansion in terms of the EBITDA margins of the company, 16% growth in terms of revenue. So nothing to complain about for Ixigo. That's why the stock is almost trading at the day's highest point, 4.5% up there.
All right, moving on to another candidate, Somani Ceramics, that is in focus today. It is on the back of its results, and it is declining in trade currently with the cut of 3%, and that is on a set of a weak set of results that have come in. In fact, the profit has dropped 32% on a year-on-year basis. It's come in at 16 crores versus 23 crores last year. Also, if you look at the revenues, has also seen a downtick of 3% on a year-on-year basis. The EBITDA has also seen a cut of 27% on a year-on-year basis, and the margins have also declined, by 1.7%, coming in at 5.1% versus 6.8% in a year ago period. So, weak set of results coming in for Somani Ceramics. On the back of that, we can see the company declining in trade with cuts of 3%.
Keeping an eye out on Somani Ceramics. Let's move on to the next one. We have Cummins India that's in focus. Now, why is that so? Because Cummins Inc., that's the global company, has reported its numbers, and we had some read-through that actually came in for Cummins India. Negative read-through that is coming in from the global earnings, 10% YOY decline in the Indian revenues versus the expectation of 12% growth. So clearly some pressure that one is seeing over there in terms of, this is the commentary in the con call, and what one could actually came in from the Cummins Inc. con call. Now, other than that, power gen revenues also declined by 17% YOY, where everyone on the street was assuming a Q-on-Q flat number, but surely seems like there was some bit of a pressure coming in there, and Cummins Inc. has also revised downwards its growth guidance for India operations by 1%. So clearly pressure there, and that is why the stock is down 7% in trade. When you're looking at it, not much of an excitement there.
All right, moving on to another stock that you have picked out for us. Arpit, I beg your pardon. You've picked out MCX for us. Tell us, what are you seeing on this particular counter? What is being penciled in on the charts?
Yeah, so if you see overall the setup wise, metal stocks overall have relatively underperformed, but being the exchange stock, technically if we see the broader market has outperformed from past many months, and technically also it is trading at lifetime high territory on weekly scale for almost last 14 weeks. It was consolidated in between 4200 to 4300 zones. However, this week it has surpassed its previous hurdle zone of 4250 with strong good volumes, form a strong bullish candle, holding well above 4300 levels, and today we have seen a gap down opening, but still it is holding well above its crucial hurdle zone 4250. So overall, looking from a chart setup, it has given a classical pole and flag breakout, and looking at the positioning setup, we can expect good rally towards 4500 4600 levels in coming weeks. So M6 would be a preferred pick. One can go long at current levels or minor dip in between 4320 to 4340 zones, with keeping stop loss of 4200 for an upside move towards 4700 levels.
Okay, that is MCX. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we do have the management of NIIT Limited. Will be talking to us about the numbers, outlooks, what is it looking like after this break. Welcome back. You're watching Market Fatafat on ET now. We do have NIIT, which reported its numbers a short while ago. When you're looking at it, the revenue of the company is up by 32% on a year-on-year basis. Quarter-on-quarter basis, also an improvement of around 11% coming in. Other than that, obviously, revenue from BFSI and other programs was up by 94% versus last year. And the technology program was up by 13%. To talk more about that, let's bring on board Vijay K. Thadani, the co-founder at NIIT Limited, joining in with us this afternoon. Mr. Thadani, good afternoon again. Couple of days back, we spoke about NIIT learnings, but NIIT Limited, decent and good numbers. We're seeing the stock buzzing in trade as well. Talk to us about the trends, right? Because we've spoken about a tech side shift coming in. What is it that you're seeing in terms of the skills over there? And are you seeing a major shift still continue towards the tech?
Yeah. So I thank you, first of all, for your kind words. But what I did want to say is that these are interesting times, because the technology services organizations are changing very rapidly, and they have to meet the increasing demands of their customers. At the same time, they did go through a high pressure time when their margins are under pressure. And therefore, there's a great opportunity for upskilling and reskilling their current people. I think that's one opportunity that we took advantage of. The second is that while we were heavily focused on tier one GSIs in the past, we had pivoted to GCCs as well as tier two GSIs. I think that strategy has paid off there. And to that extent, I think both these are visible. The AI and the generative AI, the role that it can play, especially in IT services companies, can be very, very significant. And I think they are all very eager to see how they can use these newer technologies into their day-to-day working. And I think that's the third large piece. Fourth is the whole architect. The role of an architect has suddenly become much more important than it used to be, given the newer set of problems that are coming in. And I think we saw our advanced programs, which we are rolling out for training digital architects, receive a very good momentum and acceptance. Not only that, I think we've been able to form a community of some very high-profile digital architects. And I think that puts us, our brand also, in a very, very strong position. So I think these are the drivers from technology side. Then, of course, there is BFSI, which we all see that the private sector banks are on a hiring spree to expand their geographic reach. And I think our ability, our training, as well as the past record of our graduates has actually been a great help in getting us into getting a large share of that training going forward. So these are some of the factors that have contributed to this year, this quarter's growth. And obviously, generative AI presents a great opportunity for us to go to Indian enterprises at large, who are all experimenting at this point of time, but will soon move into very directed production applications of generative AI and AI in their day-to-day work. So I gave you a very long answer to your short question, but I thought, given the short time we have, I should just explain it a bit.
This is Ankita also joining in. Sir, tell us, what about, has the attrition really peaked out? What are the hiring trends? Are we beginning to see green shoots finally as far as the IT hiring is concerned?
Yeah, I think there is a small thaw which we see, and therefore to that extent, hiring has started. TCS, Infosys, the big ones have already come on record to say that they will start hiring in a small way this year compared to the large numbers they used to have. At the same time, each company has built a different plan of how they would like to get their freshers. Definitely, freshers will need to have deeper skills, which is again a very good news for us because we like to build people with deep skills who are day one, R1 productive, and that's what NIT has been known for all this while. So we see these as very good news which will contribute. The other thing which I want to say is, while we have been able to recover out of the trough which we went into last year, 4 quarters ago, with this pivot, when the hiring resumes, I think that will add a further impetus to our growth trajectory as we go forward.
Mr. Thadani, a lot of exciting launches and highlights have come in for you in the quarter as well, especially what I was reading also in terms of the ACE Banker program in collaboration with HDFC Bank. So could you talk to us about a bit more in terms of the client confidence that's shaping up, domestic as well as on the global front, GCC side? How is it all looking like?
Yeah, so I think the past track record of NIT graduates as well as our deep associations with the Indian enterprise sector, especially the banks, where we've been there for the last 17 odd years, I think is helping us open new doors and come up with more innovative models for them to get and attract better quality graduates to join their workforce. They on their own were very good at attracting large number of people, but given the special training that we had, I think we believe that we will be able to generate a better generation of bankers who are more attuned to current trends and current technology going forward.
Mr. Thadani, thank you so much for taking the time out and joining us today.
Thank you. Appreciate your time and good work.
Thank you, sir. Well, that was the management of NIIT, but moving on, we will resume our stocks that are buzzing away in trade. For that, I'll come to you, Arpit, first. HDFC Bank is the name that you've picked out for us. Tell us, 1 month, we have seen a bit of a consolidation coming in on this counter. Tell us, what are you seeing on the chart for this?
Yes, talking about HDFC Bank, if we see the bigger time structure, so HDFC Bank is in a range between 1515 to 1750, 1800 zone from past almost 2 years. On the weekly setup also, if we see, it has formed a strong base near 1600 levels. On daily scale, it has given a fresh consolidation breakout after 18 sessions. So it is holding well above its 50 DEMA. And today also, if we see, overall the broader market in Nifty is down, but Bank Nifty is holding and recovering mainly because of HDFC Bank. So from the current setup, the risk reward is quite favorable in HDFC Bank. We can see a move of 4 to 5% upside towards 1750 levels. So HDFC Bank would be a preferred pick as per the technical setup. So one can go long in between 1645, 1650 with keeping stop loss of 1600 for an upside move towards 1750 zones. So HDFC Bank range breakout on daily scale and the risk reward is quite favorable. So that would be a preferred pick within the banking space.
Okay, that is HDFC Bank, keeping an eye out over there on that level. But let's move on and Junai, talk about Weber Global. This one is an earnings candidate. How is it looking like?
Yes, so mixed set of numbers. If you look at the revenue, it grew about 15% year-on-year basis, coming in at 756 crores versus 658 crores. But net profits saw downtick of about 7%, coming in at 28 crores versus 30 crores year-on-year basis. Now, if we move forward to operating performance, then EBITDA margin as well declined, reported at 7.6% versus 8.8% year-on-year basis, and EBITDA also saw a downtick of about 2%. Now, commenting on more on EBITDA front, management highlighted that this decline was due to higher spends on digital marketing for the new customer acquisition, and they remain positive on the digital business going forward.
Right, Arpit, coming to you, ICICI Prudential Insurance is what you've picked out for us. Tell us, what are you seeing on the charts for this one?
If you see overall the insurance pack has seen a tremendous rally in the last series of the July. So overall from the chart specific, if you see from past 3 years, overall the sector was underperforming. However, in last couple of months, we have seen a good outperformance from lower levels, and now ICICI Pru. If you see the chart setup, it is trading a lifetime high territory. On the monthly scale, it has given a range breakout on monthly scale after almost 3 years above 700 levels. And the good part is that it is holding at high levels. In the previous attempt, used to fail to hold about 700 levels. However, looking at the daily and weekly setup, it is consolidated in the upper band and absorbing the supply. So going forward also for the coming series, we are quite bullish on the insurance stocks as a whole, and ICICI Pru would be a preferred pick. So technically also it is quite strong. So one can go long at current levels with keeping stop loss of 690 for an upside move towards 800 plus zones.
Right, moving on to Divi's Labs, which is all set to report its numbers as of tomorrow, and right now, as if even the Nifty declines, it is picked up in trade. It is trading with gains of almost 1.5% right now. But let's look at what we are really penciling in on Divi's Lab. We are expecting a revenue uptick of 7.4% on a quarter-on-quarter basis and a 2.1 uptick on a year-on-year basis. We also expect the profits to go up by 45% on a year-on-year basis and 38% on a sequential basis. The margins also, we are likely to see an uptick of we are penciling in the margins to be around 28.4% versus 25% in the previous quarter. So we are expecting good results from Divi's Lab. In fact, the factors that are at play are the healthy tractions in the CS and the nutraceuticals to be offset by a decline in the generics portfolio. The Divi's exports for Jan to Feb 2024 has been about $114 billion, implying that $95 million are expected exports for March 2024, and that's what the results that we are expecting from Divi's Labs. A couple of things to watch out for: update on the pricing of generic API portfolio, and of course the update on the commercial supply orders received by the GLP-1 product. So that's what we are waiting out for Divi's Lab.
Okay, surely keeping an eye out on Divi's Lab over there. But let's move on and talk about the next stock, Junai, Indegene. That's the stock that you've picked out as well.
Well, yes, so Indigen is focused on the back of its numbers. We are seeing improvement on all fronts. If you look at revenues, it's seeing an uptick of about 11% coming in at 675 crores versus 106 crores year-on-year basis. Also, net profit saw a jump of about 28% coming in at 88 crores versus 68 crores. If you look at operating performance, EBITDA margin stood at 19.6% versus 19%, and EBITDA also saw a jump of about 15%. Now, moving on, company came up with other highlights as well. Well, the company became a zero debt company in this quarter. Also, company is anticipating a similar growth momentum for the industry to continue ahead as well. And they say that their healthier pipeline will sort of keep the momentum going on, and they remain confident for the next over medium term outlook.
All right, with that, we come to an end of the show. Those were the stocks that are buzzing away in trade. Jinai, Arpit, Amar, thank you so much for joining us on the show. But with that, it's a wrap on this edition of Market Fatafat. Vinny and I will take a leave. Thank you so much for tuning in.